Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this around noontime on Friday, August 1st. So the last 3 weeks or so, we've been talking about just more and more areas of the market, not doing badly, just kind of not participating, kind of marking time while the big cap indexes go up. And we've also talked about how usually 3 to 4 months after sort of the kickoff point, could be the absolute low, but sometimes it's when the market really gets going after a big correction, is usually a normal time for some indigestion. This is the first week where we've seen sellers step up. Tuesday and especially Thursday, we saw gaps up on good news, a lot of good news recently, trade deals, earnings reports, stuff like that. And both of those were sold into. And then coming into Friday here, whether it's tariffs or economic fears, jobs report, the market's taken a pretty good hit, or at least, an across the board hit. I wouldn't say it's gigantic at this point, but most things are taking on water, okay? So where does that leave us? Well, bigger picture, nothing's changed. I still think the market's next big move is up, meaning 10% or 12% or whatever, you know what I mean, like a big multi-week, multi-month move. However, near term, I would say, number one, our intermediate term model is now, trend model is now on the fence, because the broader indexes, small caps, mid caps, New York Composite, and even equal weight big cap measures, which we'll take a look at, are all kind of testing the 50-day lines, okay? Now, that's not the end of the world. We just went up 25 or 30%, so to come in 3 or 4%, it's not the end of the world, big picture, but it is a slight change of character, clearly near term, so we'll see how it goes. Ironically, I would say on the growth side of things anyway, I have more stocks I'm following as I'm recording this video now than I did a week ago. There's just been a lot more stocks with the sales, with the earnings, with the liquidity that have reacted well to earnings and are at least somewhat in a position to possibly lead. Some of them are gapping up from low levels, but some of them are gapping up toward, multi-month highs or out to new highs too. So it's a little bit of a dichotomy out there. I don't offer any predictions. This could be a 3 or 4 day shakeout and we get back going again, or it could be the start of a 4, 5, 6 week kind of consolidation phase where some stocks fail, others emerge, that sort of thing. But it's kind of choppy and tricky for, say, August and part of September or something like that. We'll just see how it goes. In terms of what to do, I think it depends on your positioning. If you've been full bore, heavily invested, haven't taken partial profits, all that stuff, yeah, I'd probably trim your sales a bit, take some partial profits, not make all or nothing decisions, but just, pare back a bit. We've been doing that for 3 weeks. So Cabot Growth Investors model portfolio has about 30% cash. So it's really just more of a stock by stock situation. Clearly, if something breaks support, doesn't look like a leader, a profit turns into a loss, whatever, you might want to dump it and hold the cash for now, okay? But if things are kind of holding support and you're on some names that are doing okay, I wouldn't sell just for selling's sake, okay? We'll see how it goes. Like I said, big picture, I remain very bullish. And the fact that at least so far, we still have a lot of earnings season to go. We've seen a lot of pretty good earnings gaps among growth-oriented companies, some that have been sort of laggards, some that are leaders. So we'll see how it goes, but I'm optimistic down the road. But right now, let's see how this pullback, correction, change of character, whatever you want to call it, goes for the next few days. See if the market needs to digest some of these huge gains from April to July, okay? Let's hop into the charts as usual. I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So you can see the NASDAQ, and we'll look at the S&P. Down here, here's your gap. Again, I'm recording this around noontime. Intermediate term basis, no problem, still well above the 50-day line. But it's been extended. It's had this run, and really there's been honestly, from this kickoff point, just when you're looking at the NASDAQ itself, there's been I guess this pullback here, there's been no real pullback at all. So it might be time to actually get, 3, 4, 5% on the downside, shake the tree. Maybe we break the 50-day line, get the fear level up. I'm not predicting that. I'm just saying, these things happen. It's normal for the market to do this, okay? But pretty big gap here, and just not on a micro basis. We did see, like I said in the intro, Tuesday and Thursday both had gaps higher to new highs on good news, earnings, trade deals, whatever, and both were sold into, and now we have this. So people can talk about tariffs or this or that, but I think the market was ready to pull back, and now we're getting some of that, okay? Now, with that said, intermediate term, like I said, NASDAQ's fine, S&P 500 is still fine. You can see well above the 50-day line. What is more interesting, I guess I'd say, is This is small cap, S&P small cap 600. You can see it's near the 50-day line. Of course, that's been the laggard index. You don't want to take your cues from, you really want to take your cues mostly from the leading indexes and the leading stocks. That's going to tell you kind of in real time what the big investors are doing. But it's, it's good to keep your eye on the bigger picture too. Here's mid caps testing the orange line, the 50-day line today. New York Composite, same sort of thing. And then even if you look at, this is RSP, equal weight, S&P 500, tested the 50-day line today. The QQQE, which is the equal weight NASDAQ 100. Okay, so they're all painting a similar picture here. Now again, not to sort of talk out of both sides of my mouth, but we just did this over a few months. So to come down like this is not, it's not big picture abnormal. But like I said, it's clearly a little bit of a change in character here, and we'll see how it goes. Do we find, do we rally back today? Do we come in Monday and just kind of keep sliding? That sort of thing. I would personally, I wouldn't be defensive at all. And if you have some winners, I would be giving them a chance, or maybe you take partial profits, but I would be giving most of them a chance above support. But, in terms of if you have a little dry powder, just hold on to it, see what happens here, and see if some of these stocks that have dipped can find some support, okay? We are seeing a couple of, I wouldn't say there's a ton of abnormal action, but this is like some of the aerospace suppliers. So this is Carpenter Technology and, ATI was the other one, big gap down. Of course, this happens during earnings season. You're always going to have some implosions. Uber, I wouldn't say is the end, the worst thing in the world, but again, you're kind of seeing some names break the 50-day line. Shake Shack was set up very well. SHAK breaking the 50-day line. So you're seeing some of that, but I wouldn't say there's been a rash of abnormal action, out there at this point anyway. Of course, that can change. Market falls 5%. A lot of these names are going to go lower. I'm not saying, if that happens. So you just want to have your stops in place. You want to try to identify which of your stocks are, relatively stronger. It shouldn't be that hard. The ones that have had good runs, the ones you have profits in, the ones that are holding up here so far on this dip. And if we do dip further, continue to hold up. Those are going to be the stocks that have the best chance here, going forward, okay? The good news as we get into individual stocks is, like I said, there's a bunch of names this week that, earnings have come out and they've either been strong names that maybe have wobbled but held. We'll look at a couple of those. Or they're just kind of names that, I don't want to say totally new names, but names that have kind of all of a sudden are back on the radar screen. Let's put it that way. So this is Reddit. Again, I'm recording this around noontime, but, very big gap here. It had a huge run last year, kind of a breakout. This was toward the end of the last, bull phase into November, December, January. And then it got crushed during the tariff thing. And it's been, it's come back some here, but you can see it hasn't been super outperformer, well short of its highs. But nice gap today. As always, we'll see how it goes. Sometimes these things gap and they'll come right back down. But I am sort of intrigued. The numbers here are great. This is RDDT. The numbers here are really still accelerating, sales and earnings and everything. So I am intrigued by it. It probably still needs some work, but Reddit's sort of back, at least on my back burner watch list, put it that way. Seagate and Western Digital, this is STX, and we've mentioned this before. Just both of these things were shot out of a cannon. This is STX. This one to me looks a little bit like more of a leader just because it kind of came out first, but they both are very, homogenous, so to speak. So, just breaking out. One was WDC, one was STX. And you can see STX report, they both reported this week. STX shook out a little bit toward the 50-day line, but you can see snap right back. WDC didn't even pull back. It's kind of gapped up. But they both look pretty good on that. Wingstop is a name. Obviously, we've talked about it. These big picture cookie cutter stories have very long shelf lives, but they also have very big corrections that can go on for like a year or more. Even if business is still okay, but just the ebbs and flows of business and same-store sales growth and all that stuff causes perception to go up and down, okay? You can see Wingstop hasn't done anything net since whatever, topped out last summer, basically, had a big correction. A nice comeback in here, and now you have this little base with a big earnings move this week. So I am kind of intrigued on that. It's a herky-jerky stock, but WING is interesting. Carvana, now this one's had a huge run over the years, the recovery, but nice comeback after the April lows. And it's been sort of up and down, but respected a 10-week line, reacted well to earnings this week. Of course, Meta was a headline name. Not really my kind of name. I wouldn't say the growth is amazing. And again, we'll see how this, again, sometimes you get these gap up and they just kind of give it up, especially if the market pulls back. So we'll see how it goes. But the reason I'm bringing it up, it is kind of a, quote unquote breakout to new highs. The RP line here is basically testing new highs too. ARGX, which is a name we kind of owned and got, we never had a big position in it. But it had a pretty smooth run in here. And then again, it's gone. I don't know where that is. That's probably really since the start of the year. So about 7 months at this point. It hasn't done anything, correcting and consolidating. Of course, medicals haven't been where it's at. But nice big gap yesterday, holding in there today. Sales and earnings look great. So maybe your perception is back on the upswing. Appfolio, this is a sort of a property manager, software player, kind of a niche cloud player. Software hasn't been where it's at, but you're going to see the stock has been kind of endlessly doing nothing here for the last year and a half. And then it's been ramping slowly here and now really coming, the roof's kind of blowing clean off today. Not the most well-sponsored name, a little bit thinner, so we'll see. It can move around. Even like eBay, which again, it's not super fast growing. There's some other names that will be in probably top 10 this coming week or whatever. But eBay with like pretty big gap in here, big volume. It's I think this was one of the biggest volume days it's had in quite a while. Bigger here, but one of the top 5 or 6 in quite a while, and really holding in there pretty well. So there's a lot of names like that. I can say, just as we, I do Cabot Top 10 Trader. It comes out every Monday. So I start the process on Friday. And, there's like a list of 15 or 20 names. Usually it's, sometimes when things get a little thinner, it's a little hard to find names. And you can always find setups and stuff like that. But you're trying to look for the best of the best. And this week there's just a lot of names that have gapped and stuff like that. So we'll see how it goes. I find that encouraging. Just looking at some leaders, a couple more names before we finish up. But like this is Robinhood. Again, we'll see where we finish the day, but Robinhood shook out pretty severely this morning, but clearly above the 50-day line. Now it's, rallying strongly. ORCL, we've talked a bunch about, it's getting hit. When you see it, it's, oh my, at the low, it's down 10 points or whatever. You look at a chart, not even down to the 25-day line. NBIS, I wouldn't say this is the biggest leader, but this is one of the sort of the cloud player, like Oracle, the cloud infrastructure players, has just been holding kind of tight in there. NBIS, Jabil, which is a little bit steadier, but you can see nice breakout here a few weeks ago on earnings, moved up. It's been chopping around this month, but you can just see no big deal on the chart. So I would say so far leaders are holding, number one. So far, meaning the market's been down this week. It's been 1 week. But so far, leaders are holding. There's not a ton of abnormal action. But when you do look at sort of the overall market, it's kind of like, okay, we've had a big run. Sentiment's a little complacent. There's been a lot of good news. It's August, September. So it wouldn't surprise me if, we're in some sort of correction consolidation. But I would just advise you in terms of what to do. We're just taking it day to day, week to week from this point. Maybe this is a 2-day shakeout and we go up 10% from here. I'm all for it. I would love that. I think the odds favor we're probably going to need a little bit more digestion. There'll probably be a little bit more news flow with the new tariffs, and now the jobs report is bad, and will the Fed cut rates and things like that. So it wouldn't surprise me if we came in, bounced, came back down, that sort of thing. But we'll just see how it plays out. If you have been paring back a little bit, if you do have a little bit of cash, I would just take things on a stock-by-stock basis. If something cracks, good riddance, and be looking for some of these leaders that are established. It's not like you have to go and say, geez, I don't know what the leaders are anymore, because most of them, like I said, are holding up. Look to redeploy those into some leaders, hopefully near support or on some sort of setup here in the weeks ahead. Overall, big picture, still very bullish. Near term, though, we continue, after having trimmed our sales, continue to hold a little bit of cash on the sidelines as we see how this pullback plays out. Okay, that's all the time I have for today. Thanks for listening. And be sure to come by again next week for a Cabot Weekly Review. And if you're still listening and you're interested, we're still offering a special on Cabot Growth Investor for new subscribers. Check it out on the final slide here.